So let's move on to foreign policy. And I've titled this False Hope, or if you noticed, A False Hope, which kind of is a play on words of the Star Wars A New Hope. Anyway, everyone was fearful of another world war, and one would think that isolation would be the option for Americans if we stayed home and we didn't get involved in anything else. But America actually went in with another option that was pursuing arrangements in foreign affairs that would actually advance American interest worldwide while also maintaining world peace. The Republicans wanted to lessen the amount of money that was being spent on armaments like guns and battleships and that type of thing, so they organized global disarmament treaties so that other countries would follow suit. Basically, you can read between the lines and realize that we didn't want to be the only one with a shrunk down military. Just didn't feel like that would be prudent. And so anyway, the Washington conference took place, and Secretary of State Charles Evans Hughes was the guy who met with representatives from several European nations, and several treaties actually came from this. The first one was the Five Power Treaty. This is where nations with the five largest navies agreed to following a ratio with respect to their largest battle or warships. Many ships had to be scrapped in order to meet the ratio. The biggest powers would have been the British and the U.S., who would still be allowed to have the largest navies, the Japanese the next largest, France, Italian the next smallest. But what they said is that you had to have a ratio of tonnage of ships. So ships that were already being built or that were already built, they could have scrapped them for scrap metal. The British and U.S. would also not fortify their possessions in the Pacific, meaning they wouldn't add more to their fleets. The Four-Power Treaty, the U.S., British, and the French and Japanese agreed to respect one another's Pacific holdings, meaning we would not attack each other in any Pacific holding that we have. Now, you guys are smart. You're looking ahead thinking, well, didn't they do that in World War II, something called Pearl Harbor? Yes, and this would have been a direct violation of that. The British had islands in the Pacific, the French had islands in the Pacific, and the Japanese had islands in the Pacific, and so did we. And so that's why they passed this. You also had the Nine-Power Treaty, which all nations represented at the conference agreed to respect the open-door policy by guaranteeing the territorial integrity of China. This goes back to the John Hay deal. Basically, everybody wants to have their hand in China and getting the goods that they have. The Kellogg-Briand Pact, no, this does not have anything to do with cornflakes, though I love the last name Kellogg and sort of wish my name was Kellogg. Mr. Kellogg, Doug Kellogg. Anyway, but Secretary of State Frank Kellogg and French Foreign Minister Aristide Briand worked out a deal to get almost all of the nations in the world to sign their treaty. This treaty denounced the aggressive use of force to achieve nations' desires. In short, it pretty much says that you cannot use war as an instrument of getting things done. And so the issue became that it permitted defensive wars, so if somebody invaded you, you could fight, and it also failed to provide taking action against violators of the agreement, which, again, if you're thinking ahead, you're thinking, well, if they outlaw war as an instrument of policy and somebody goes ahead and causes war, the only way to stop war is to go to war. So yes, it was quite the issue, but it was more of a symbolic thing of saying we don't really want people to go to war. Foreign business. Latin America, Calvin Coolidge kept U.S. troops in Nicaragua and Haiti, and that kept our economic interest in those areas. The Middle East, the British had already recognized that the Middle East was becoming a major source of potential wealth through the oil industry. Charles Evans Hughes would eventually secure some oil drilling rights for U.S. companies in that part of the world. And again, if you know a little bit about business, then you've heard of BP, like the BP station, the gas station, which stands for, yes, British Petroleum. And that's where we get that, because the British did have their hands in the Middle East as far as oil goes. Tariffs, seems like we never get done talking about tariffs. They decided to pass the Ford-McCumber tariff, which increased the duties on foreign manufactured goods by 25%. Now, not quite as high as the McKinley tariff, but still a protective tariff nonetheless. This had nice effects short-term, but bad effects long-term, and contributed to our issues and leading into the Depression because nobody really wanted to trade with us because it was too expensive. The recovery of war costs. Before World War I, the U.S. was seen as a debtor nation who imported more than we exported, meaning we sent stuff out, was a debtor nation who imported, meaning we brought stuff in more than we sent stuff out. It emerged from the war as a creditor nation, having lent a lot of things to the Allies. So now we're kind of changing phases. People owed us money. Harding and Coolidge had insisted that all debts get paid back. But the British and the French said that they had suffered much worse because they had fought longer, and they were right, and wanted the U.S. to lower our tariffs to kind of help them out. At the Treaty of Versailles, it was decided that the Germans would have to pay $30 billion in reparations. I've seen numbers go as high as $55 billion, but just know somewhere around $30 billion minimum. There was virtually no way that that Germany was going to be able to pay that back. So Charles Dawes came up with a plan called the Dawes Plan. Now, this is not dealing with the Dawes Severalty Act. If you're thinking back, that dealt with the Indians and their land. This is different. So Charles Dawes comes up with this plan, and under this plan, it established a cycle of payments from the U.S. where we would give money to Germany, and then from Germany, they would pay England and France, who would then pay us back. And the Allies would use that money to pay the U.S. back. The idea was to ease some of the financial burden, and at least money was moving. But once the Great Depression hits, we can't give Germany money, and the Dawes Plan ends. When Germany can't pay their payments, then England and France get mad, and then Germany says, we're just going to get a new ruler named Hitler, and we're going to create our own economy based on military. Most nations weren't able to pay their debts back, and it left a bad taste in everyone's mouth and helped lead to some of the issues prior to World War II. You have to understand that World War II, one of the reasons it got started was the Germans wanted revenge. They felt like they were treated tremendously unfairly when it came to the actual war itself. And they felt like afterwards $50 or $30 billion was just astronomical, and it was. The Great Depression. Now, as far as the Great Depression, I believe this would be probably chapter 36 in your book, if I remember correctly. The Great Depression, as far as the history, America had suffered economic issues in the past, and for the most part, it seemed like a natural business cycle that would maybe last, 2-3 years max. But depressions had varied in severity. And ones that included bank failures and the collapse of investment and credit systems often resulted in long-term, deeper depressions extending several years. 1837, 1873, and 1893. Almost like a cycle of like 20 to 30 years max. And the depression of the 1930s felt different as it lasted longer, it affected more people, caused more business failures and unemployment than any previous to it. The 1837 panic, the 1873 one, 1893 lasted about a year and a half. This was going to be way worse. Most people believe that the stock market was the only reason that the crash or the depression happened, and when the stock market crashed, that's where the depression started. That's not true. So let's talk about the causes of the crash, which did, deal with this, but it did deal with the cause of the crash. So the uneven distribution of wealth. Wages had risen relatively little compared to the large increase in productivity and corporate profits. Most of the nation's wealth was wrapped up in only about 5% of the people, meaning the demand for products declines and businesses have to lay off workers. 5% of the population isn't going to Walmart. If you only 5% of your population has money, they aren't the ones that are the general public going to Walmart to buy stuff. And so therefore, you don't need an even distribution of wealth. You just need a distribution of wealth that incorporates a lot of different people spending money. You can't just have 5% of the population spending money at stores. And then stock market speculation. Many believe that they could play the stock market and win. People began not partaking in the share of the profits of the company, but to make a quick turnaround, a lot of money. So they would buy something, quickly make a couple bucks, turn around, sell it, and then try again with another company. And so people that worked on Wall Street started allowing people to buy on the margin, which allowed people to borrow most of the cost of the stock, making down payments as low as 10%, meaning if you bought one share of stock that was normally supposed to be one share for $100, all you had to show them was 10. See, the investors depended on the price of the stock market to increase to make their money back. So if I'm borrowing 90% of my stock and then all of a sudden my stock crashes, well, now I owe somebody $90 in that case that I just gave you, and that creates utter panic. And when stock prices dropped, the market collapsed and many lost everything they borrowed and they invested. So me borrowing money doesn't just hurt me, but it hurts the investor who allowed me to do it. And it also hurts the business because they're not seeing the actual money go in, but they're seeing the stocks go out. The excessive use of credit, low interest rates, and a belief of both consumer and business that the economic boom was permanent led to increased borrowing and installment buying. And so think of it like this. When people have low interest rates, as we said before, they want to buy large-scale goods. And they believed in the consumer businesses. People just kept buying and buying and buying, and then all of a sudden they wanted more, so they just started putting them on credit. And then again, They started doing installment buying, and they couldn't pay back their debts. Well, when you have a lot of debt and you lose a job, you can't pay those debts off, so you're in trouble. That's the excessive use of credit. You have the overproduction of goods. Basically, think of it like this. In 2008, in our area, we had a huge, or 2000, I guess maybe let's say 2003 to 2006, we had a huge boom in businesses and in houses, and everybody was building a brand new house here. Everything was going great. And then the economy crashed, and we have a whole bunch of houses that were sitting there that were really good, nice houses, but they were too expensive and nobody could buy them. There was just a surplus. And a surplus of goods isn't necessarily a great thing when it comes to the economy. A weak farm economy. The overproduction and of farming goods. You had high debt for the farmers and you had low prices, and really the boom never ever really got to the farmers to help them out. As far as government policies, the government trusted business and did little to regulate them. Remember, the theme of Calvin Coolidge's presidency in relation to business in the Roaring Twenties was, the business of America is, I'll let you finish it in your head or out loud, good, business. And so that is part of this. That created problems. Again, high tariffs hurt global trade. The Federal Reserve tried to maintain the gold standard, but again, not enough gold is getting to people. The global issues, Europe had never truly recovered from World War I. It was still a mess, especially as we're having to help them. And loan repayments and reparations were just a disaster. So that allowed trade to be halted as well and created more problems within our economy itself. Now, Wall Street crash. Stocks continued to grow to an all-time high. People were doubling the value of their stocks in a year. So more people began to invest in the stock market. And from March 1928 to September of 1929, stocks were on the rise. Stock prices had fluctuated for several weeks leading up to the crash. On Black Thursday, October 24th, 1929, there was an unprecedented selling on Wall Street and stock markets plunged. So to stabilize prices, bankers bought millions of dollars of stocks. The strategy worked for a day just to kind of give some stability there, kind of what they just did recently, actually. It worked for a day, but Monday, the selling resumed again. By Black Tuesday, October 29th, 1929, millions of investors ordered their stocks to be sold, but there were no buyers to find them. From that day on, stock prices kept falling, and by late November, the Dow Jones had dropped almost 200 points. By 1932, the Dow Jones would hit rock bottom at less than a ninth of its original value. The story told here is that President Kennedy's father was a stock market investor, and he knew it was time to sell when he was in Washington, D.C., or I'm sorry, New York City, and the boy that was shining shoes in the train station was giving President Kennedy's dad, who was a stock market investor, information on what stocks to buy. And that's when President Kennedy's dad said he knew that the stock market was going to crash and he decided to sell. It just grew too fast. And then what that does is that leads you to the effects of the crash itself. And the effects, well, looking back number-wise, the Depression really lasted from about 1932 to 1939, but it sure felt longer while it was going on. Most people would say it started in 1929. That's just not true. The GNP dropped from 104 billion to around 56 billion in 4 years. That's gross national product, stuff that we sell. The nation's income declined by over 50%. If you were making $100,000 in 1 year, you made $50,000 now. 20% of all banks closed and wiped out almost 10 million in savings. They didn't have the FDIC. Your money wasn't insured. So if a bank closed, you lost your money just as much as they did, which was devastating for people. Unemployment reached 25% of the workforce, not including farmers. Now, we're going to see numbers like that if this pandemic keeps up, but this does mean that poverty and homelessness is going to increase. Mortgage foreclosures, and evictions were commonplace because people couldn't pay their bills. People couldn't afford their house. Hoovervilles popped up in cities. These were like these makeshift shanty towns that people created, making fun of President Hoover and just trying to get by. They were shacks, shanties. Think of them as like people would use them for ice fishing. The crash ended the Republican domination of government. At this point in time, moving forward, everybody hated the Republicans, and this is why Roosevelt's able to take over for so long. Life for African Americans and farmers grew increasingly difficult during this time as well. We'll stop there. We'll pick up Hoover's policy later.